Welcome to this indicator overview by Portfolio Kings. My name is Dan, and today I'll be showing you the Wolfe wave indicator for Thinkorswim. This is a review of the price pattern Wolfe wave, which was created by Bill Wolfe and later turned into an indicator by Robert Payne. What Robert Payne was able to do was really amazing. He took the Wolfe wave price pattern and turned it into a charting indicator which automatically charts the Wolfe wave pattern as the price action plays out in real time. The entire concept of Wolfe wave comes down to identifying areas of supply and demand and forming points around them. These points, known as waves, are the numbered 1 through 5, with number 5 indicating the ending of the pattern and the signal of entry for the trade, as can be seen on this chart of Twitter with the Wolfe wave on the daily time frame. Using Robert Payne's system, this indicator will give you an automatic entry signal when it is ideal to enter. Otherwise, entry would need to be identified manually, which can lead to an inadequate position if the price continues moving in the opposite direction. Aside from the automatic arrow that gets charted when the time is right to enter, there are other ways of confirming an entry. One of those ways is by looking at volume. Once price reaches wave 5, begin looking for a spike in volume. Once volume spikes and price is at 0.5, this is signifying a stoppage in the current price action and the beginning of a reversal. On February 25th, Wolfe wave identified wave 5 on Twitter on the daily time frame, along with a large spike in volume down here. This would be a telltale sign to begin looking for an entry. And what do you know? 2 days later, the indicator charted an arrow for an entry. Now, it isn't always necessary to wait for the arrow to enter. If there's enough confirmation beforehand, such as the large spike in volume that occurred 2 days prior, then that is enough information to enter the trade. Once the entry has been made, it is time to formulate an exit strategy. Originally, Bill Wolfe intended for the 1 to 4 extension, this red line here, otherwise known as the estimated price at arrival, to be the place of exit. But price doesn't always hit the EPA, especially if the wave 4 to wave 5 move was very extended, just as seen right here. In this case, the price came down to test the top of the Wolfe wave channel and broke it on the second go around. Came down a bit more, tested $60 and held up at this key support level. Having a profit target in this area would have been a good idea, even though the price is very far away from the EPA. This is why it is very important to properly manage risk and establish a realistic profit target, even if it may not line up with the charted price pattern. Okay, this was an example of a bearish Wolfe wave on Twitter. Now I will show an example of a bullish setup. Okay, so this right here is an example of a bullish Wolfe wave on Boeing on the daily time frame. Pretty similar setup to the one I just showed on Twitter, except this time the pattern is reversed, where the price will be breaking up instead of breaking down. Once again, just to recap, waves 1 to 5 form, and then an entry will be signaled at wave 5, being confirmed by this arrow. In this case, Boeing did hit its EPA, this green line right here, which was around $188. The Wolfe wave indicator was able to identify this pattern and caught a huge $40 move on Boeing, which turned out to be an amazing trade. And yeah, that's basically it for the review of the Wolfe wave indicator. Huge thanks to Robert Payne for creating the automatic charting system of this price pattern. If you would like to learn more about these types of indicators, then make sure to check out our trading group. We offer great discounts on these systems and teach how to properly use them. Thanks for listening, everyone.